Pam, thank you so much for joining us here at SuperReturn International. You've talked today about creating robust portfolios and what you need to do in this sort of environment.
Well, first of all, I do think you need to find the deal. So actually the use of artificial intelligence and machine learning can help you narrow the scope of the types of deals you're trying to find. Add-ons being very important here. We last year bought 29 add-ons, so you need to start early and sort of know what you're looking for. But as a portfolio matter, I think concentration risk is something that we hate in our own investments, so we should apply it to ourselves and ensure that we're not concentrated either for us, because we have 7 industry specializations, we can really use all 7, and we shouldn't we don't do sector-focused funds. So for us, we should hold to our own limits, both by industry and by company. So we don't want any company to be more than about 10 to 15% of a fund.
That's creating the portfolio. What sort of teams do you need in this sort of environment to be able to navigate these kind of quite difficult climate that we're in?
Well, I think some years ago we sort of recognized that investment bankers may not be the best operators. So today Riverside has 41 operating partners who help us with diligence, who are in process of working on the companies, chair the board of every company once we make the investment, and are relentless in their execution of the strategy. So that, there's just constant determination of what the growth strategy is going to be. You've got to get growth. We've done 600 transactions over the life of our firm. And if we look back over those 600s, the ones that have done really well are the ones that have grown, top line.
There's been a lot of talk about recession and where we are in the cycle. And with that in mind, what does private equity need to do at the moment, and what does it need to see as opportunities and grasp in an environment like that?
So, recessions come and go, and I think the most successful private equity firms invest through all cycles and are merely, one of the great things about private equity is you are longer term. If you're in a very long recession, as in 2008, right, it might extend your hold periods. We owned a company called Dwyer, which was a franchisor of things for your home, plumbers, et cetera. And we invested in it in 2004. And, under the normal course, we would have sold it in 2008. Bad time to sell. So, we just held it longer, and it was fine. It was still a great investment for our investors, and everything was fine. So I think you have to be nimble, and you have to be able to sort of say, how am I going to respond to the environment that I'm in right now?
You mentioned there a firm that supplies stuff to the home. You've talked about how actually looking at micro opportunities in a macro picture like this is a good way to go too.
Well, yes, and we are, as a lower middle market investor, we are very micro. I think I used the example earlier that we owned a MEC3 is a gelato ingredients company, and people will likely eat gelato regardless of what's happening around, whether there's, a wall, Brexit, a trade war, whatever it is.
There's always going to be opportunities to be found despite the environment.
Always. And I think that often opportunities are created in disruption.
So always opportunities to be found, and you're very optimistic about private equity still being a good place to be and invest.
Yes, and I guess I'll channel my inner James Carville here and say, it's about the returns at the end of the day. So here's a good example. I talked about Dwyer, which is the company that it does plumbing and grass mowing and such. So it's had 3 private equity investors since 2004, 2 times with us and once with another firm. So let's suppose you invested $1 in Dwyer and you held it, kept rolling it through its various private equity owners. At the end of the multiple years, by the second quarter of 18, you would have had $7.60. If you had taken that same dollar and invested it in Coca-Cola, which was a good stock because it performed well through the recession, and you rolled forward your dividends, so I'm doing apples and apples, you would have earned $2.16. So that's a pretty easy reason for why you should invest in private equity.
A great note to end on. Thanks, Pam, so much. Thanks for sharing your insights.